really beating across the board when it comes to your net revenue, whether we're looking at investment banking, asset management, or wealth management. But let's focus in on wealth management, since that is by far your biggest revenue generator at this point. What led to the beat, and what do you see sort of continuing that momentum?
Well, first of all, wealth is the durable part of our model, and it has been for years. Our institutional businesses, we've had more operating leverage in that. But turning back to your question, wealth, we've continued to gain market share. We won J.D. Power, employee advisor satisfaction. That's voted by the advisors, made us #1 for 4 years in a row. And so we'll grow through recruiting. But importantly, we're going to see a lot of productivity gains from AI. I mean, it's the topic not only of the day, but of the year. And we see the ability to just do a lot more business in the same sort of container. We have a great business model, and I see it continuing.
And when it comes to AI, I want to talk about that a little bit in the context of advisor recruiting, because you said on the earnings call today that advisor recruiting remains as competitive as I've ever seen. And I wonder how much you're competing against AI. I feel like you and I have had this conversation before, but it's just getting ingrained in the muscle memory, especially of the younger generations, that, you fire up an LLM for advice, and I would imagine increasingly that extends to financial advice as well.
Well, we'll see. I think that there's sort of a disconnect, Katie, because every time something comes out about an LLM doing something, all the wealth stocks, including ours, get hit. Yet every wealth firm in the country is recruiting at the highest level ever experienced advisors. So which is it? Is it that the LLMs are going to replace advisors, or are advisors important? I'm on the side that the advisors are the last mile of advice, and that as AI gives you more abundant information, but as you get more abundant information, the value of advice goes higher. So that's where I land on that. We'll see. But there was a recent survey that said from 2009 to 2023 or 24, I think it's by Bloomberg, frankly, that the affluent people that would use advice was 30%. Now it's up to 60. So I'm in the advice game.
Yeah, and that was by Bloomberg. Thanks for shouting us out, Ron. We always appreciate that. Yeah, I'm glad.
Hey.
I am curious about just a couple of interesting things that jumped out at me, and particularly with this earnings. Obviously, we knew the IB business was going to do great. Wealth is doing great. I was taking a look at fund banking, and I know this came up on the conference call. There was very strong growth there, and I was kind of doing the calculation. Something like about a quarter of your funded loan portfolio right now is fund banking. And I am curious, is this sort of a longer-term growth opportunity for you, or are you just kind of taking advantage of what's been happening in the moment with regards to what's going on behind the scenes in private capital?
Well, look, I would like to think we never try to do anything in the moment, Romaine. We just, we always have a strategy. I would like to tell you that, and it is true. We got into when SVB and all that happened, we recruited a lot of people. We went from maybe 3 people to probably nearly 200 now in venture lending and fund banking, and we view it as an integral part of that ecosystem. Not only can we lend to companies, we are helping the sponsors and the venture funds, and we're providing wealth management to the founders, and we're doing investment banking. So it's a great growth opportunity for us, and I'm excited about it. And I think you noted the trends, and I would expect those to continue.
Are there any concerns here about private market valuations and them maybe potentially being out of sync with what we're seeing with regards to public valuations?
Well, we've seen that for a while. I mean, look at just when I'm asked about acquisitions, and I've done probably as many acquisitions as anyone in my career, at least in building Stifel. And today, I'm being shown deals that, let's say 15 times adjusted EBITDA, and I'm trading at 8. So there's a disconnect right there, which tells you, by the way, why I'm buying my stock instead of doing acquisitions.
I also want to talk a little bit about investment banking, beating when it comes to revenue there versus estimates. We know that Stifel was one of really a plethora of banks that were involved in the SpaceX IPO in some capacity. Really curious what that process was like, and moving forward, now that that's in the rear view, how you can sort of build on that.
Well, look, that was a well-managed process. I hate complimenting my larger firm competitors, but that was a well-run process. For us, though, it didn't really drive our results. It did drive the results, I think, of the larger firms. We were certainly involved. We expect to be involved in the other ones. But for us, what you saw was the breadth of our platform, and it was not. Both people think, oh, Stifel's depository M&A. No, that was actually somewhat muted for us relative to healthcare, technology, and industrials. And so we have a pretty broad-based, diversified platform, and you saw that come through. Investment banking was up over 40%.
Ron, are you planning to do any more acquisitions anytime soon? Anything you want to tell us?
Hey, I'm always evaluating things, but as I said, I think the private valuations, especially with leveraged returns, has made those things. I'm a little cautious. So we're not just going to do, Romaine, a deal for deal's sake. I'm not looking just to do a print. I'm not looking just for revenue. We had 24% return on tangible equity for the quarter and for the year, and frankly last year. That's my measure, return on invested capital. And some of these deals require some Excel, growth assumptions to make them work that probably I'm just not comfortable with at this point. But hey, we'll see.